Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
Well, last Friday, with a sharp decline in unemployment, stocks in New York shot up by more than 3% on the Dow, 2% on the S&P and the Nasdaq. What's the story in the global markets?
Okay, well, that is actually the biggest story in the market due to the surprisingly good U.S. May unemployment report. Now, it's surprising to think that 13.3% unemployment rate, or 16.3% if some errors are corrected, is good news, but people were really expecting more than 20% unemployment, and they actually overlooked the 2.5 million jobs created in the restaurant and retail sectors as the U.S. economy went out of the lockdown and shutdown. So it does show that the U.S. labor market flexibility has an upside as well as the downside, and the Asian stocks today, it started off very well, partially because of the U.S. market doing so well on Friday. But while Nikkei continued to do well throughout the day, Shanghai and Hong Kong index, well, they ended positive for the day, but they started very high at the beginning of the day. Then they fell more or less throughout the day. So the Chinese statistics came out this weekend saying that the Chinese export figures were not as well as expected, so that probably was the reason why the Chinese market didn't do very well. The European stock market, they're not open yet. They did very well last week, but they're expected to fall today because the German industrial production data was disappointing. That came out during the weekend. Both KOSPI and Nasdaq did very well last week. It did also, it ended positive today, but KOSPI, like the Chinese stocks, started out very well, then lost momentum throughout the day. And Nasdaq, it opened relatively high, fell into negative territory during the middle of the day, then recovered. The explanation why Korean market did not do as well as expected was that the people are not convinced that the U.S. recovery is strong enough, and they're waiting for the U.S. Fed FOMC meeting later this week.
Now, another story here, we see Korea's structural fiscal balance is in the black, but the surplus is lower than it was last year. In fact, it's shrunk by the most in the OECD, second only to Greece. Now, this indicator shows the sustainability of the government's finances. Tell us a little bit more about that indicator and what, if anything, needs to be done about it.
Okay, more specifically, the structural budget balance is the government's fiscal position purged of the estimated budgetary consequences of the business cycle, and is designed in part to provide an indication of the medium-term orientation of the fiscal policy. In other words, the structural or underlying fiscal balance is the difference between government revenues and expenditures corrected by the effects that could be attributed to more or less temporary economic cycle and one-off events. So it shows the fundamentals of the government budget. Now, the Korean structural balance is usually a surplus. It fell to a 0.57% deficit in 2007 when Korean budget expenditure went up because of the global financial crisis, but the preceding administrations managed to raise the balance back up to 3.37% surplus in 2018. But the Moon administration, because they were engaged in a lot of additional spending to combat high employment, the surplus is started to fall, and now it's 0.86% in surplus, which is still better than most advanced countries. U.S. structural deficit is 6.54%. Japan's structural deficit is 3.44%. Germany has a 0.36% surplus. So Germany has a surplus, but it's still lower than Korean structural surplus of 0.86%. Now, the worrying thing, as you just mentioned, is that while Korea is more or less better off than other advanced countries, the budget is falling into deficit very quickly. As you mentioned, we're second behind Greece, and we are worried because, well, Korean demographics said that the structural surplus is bound to fall and head into a deficit as there's more older people, so there's less taxpayers and more expenditure needed to support these retirees. And in addition, there was increased spending to combat unemployment and the increased spending that we're having to combat coronavirus. Now, this is a one-off event, so technically it shouldn't be included in the structural deficit, but structural balance. But a lot of these measures are going to be medium-term or long-term in nature, so it's bound to affect the structural balance, and it'll lower the structural surplus, perhaps even put it into a deficit if this trend continues.
All right, well, we're at the start of a new week. Tell us, Professor Yang, what we should be looking out for in the days ahead.
Okay, for Korean statistics, there's lots of interesting statistics coming up this week. Tuesday, we have the government budget trend. This is not the structural budget that we were talking about, but the actual budget, and it's probably going to be worse than the OECD figures that we were talking about right now. On Wednesday, we have the May employment figures. We'll see whether the gradual reopening of the Korean economy has any effect on the employment figures. And then there's also April money supply and liquidity statistics and May financial market trends published by the Bank of Korea. And this is probably going to be the most important. The Ministry of Economy and Finance will publish its Green Book report, Economic Trends, for June. Now, on Wednesday, for foreign statistics, U.S. Consumer Price Index will come out. We'll see whether the U.S. economy has a strong demand as they come out of the lockdown. And the U.S. Fed FOMC is meeting on Thursday. And this is another interesting global statistic. On Friday, the U.S. will announce Consumer Sentiment Index. So we'll see whether the people in the U.S. is optimistic about the end of coronavirus or pessimistic because of the racial problems that they're having right now.
All right, Professor Yang, we'll be watching all of that. Thanks so much for sharing your insights today.
Thank you.